This is episode 3 of the Bitcoin price report for October 11th, 2022, where we discuss the micro, the macro, the fundamentals, and technical analysis with a focus on the Bitcoin price. The Bitcoin price this morning was 19,104, down 4.2% from last week. Technicals show we are still very close to the support levels of 18,550, stayed above support for several months now, but if we have any macroeconomic shock and the likely recession, we probably can break down sharply. We use the broad cbbi.info metric for a rough estimate of evaluating the microeconomics of Bitcoin. It shows 8, meaning Bitcoin seems to be in the undervalued zone. Look at our Bitcoin portfolio using the dollar cost average and limit order strategy. We just made one purchase order of Bitcoin and still have about 11,000 in cash. The portfolio is down 0.5% since last week when we started. On to the TA for the rest of the markets. The SP 500 is just below the resistance level of 3650. Seems to suggest some downside, especially if the CPI report comes in hot. The report shows CPI lower than expected. We'll likely see the SP 500 break above resistance. The QQQ is also just below the resistance level of 11,029, and it's the same with gold. It's below the resistance of 1682. Oil is above support at 88.5. On to currencies. The dollar rebounded at the 110.9 support and continues to be strong as the pound was rejected at 114, even as the Bank of England continues to support long bonds. The euro is trending lower again. It's at 0.97 to the dollar. And the yen seems to be moving above key support levels of 146 despite Bank of Japan intervention. Next, we have a couple interesting notes for the macro analysis. I recommend you watch a video from Macro Alf, who's compared this downturn to 2001 and how it seems we're in the first leg down similar to 2000 before the recession started in 2001. Macro Alf discussed similarities in inflation. It was around 4% then, and the Fed policy leading up to the downturn. He also predicts some downside earnings disappointments. We mentioned in a past video that in 2000 it was the start of a real asset cycle following the dot-com boom. I do agree with his assessments, and we likely have some further downside in the next 12 months. You should follow Macro Alf and subscribe to his Macro Compass newsletter. The next analysis is from YouTuber Benjamin Cohen, who adjusted the S&P 500 based on the M2 money supply growth. The M2 money supply is really the debt-based money created in our banking system, and it drives our economy. So this is very relevant to evaluating real stock growth. We may just have a situation, as Milton Friedman might say, is having too much money chasing the same amount of stocks. With adjustment to the S&P 500, we can see there are clear support and resistance levels and a channel that has remained generally flat for the last 30 years. We may be headed towards the support at around 3,000 for the S&P 500. This is very interesting analysis. This is a very good metric to follow, and you should check out Benjamin Cohen's video for more details. If you like this video, please like and subscribe. Thank you.